Dollar Tree shares are slipping today after high labor and utility costs sent the company's expenses higher during the quarter and affected its annual profit forecast. It also saw its inventory hit by theft. That's a concern for many of the retailers that have been reporting this season, including Dick's Sporting Goods and Target. Those shares down some 10% here. It's interesting because on the call, CEO Rick Dreiling said that Dollar Tree is positioned to bring in wealthier shoppers. That's something that Walmart had talked about as well. But if your costs are going up, then that doesn't necessarily help matters.
Yeah, for a company that's focused on keeping everything below or around $1, they've added in terms of the kind of pricing mechanisms and trying to also welcome some higher income shoppers. They've added $3, $4, and $5 frozen and refrigerated items to a little over 1,600 of their Dollar Tree stores. They also are in a heavy kind of spending phase. And if you think back to Adrian Yee, who joined us earlier this week to talk about where companies are making some of these strategic investments and how that could impact margins in the near term, they're looking at these store renovation projects. They completed about 276 rather of them in this most recent quarter. But those renovation projects, I think for investors, they're going to be looking across, all right, where do we get to the completion rate, where do we get to the completion stage of that and see the benefits on the other side, and at the same time where they're expanding some of their multi-price plus offerings to 715 additional dollar stores as well.
Right, and they're also spending more on wages, apparently. They're selling general and administrative costs, 25.3% of total revenue. It was 24% a year earlier. The third quarter forecast for earnings per share is at most $1.04. Analysts have been looking for $1.29.